Alright, in this video we're going to talk about refining bearish order blocks. So as you can see over here from the very high, we have an area where price broke structure and price retraced back to an order block. Okay, so we're going to take this one step at a time. As you guys can see, we have 5 areas of where prices pulled back and retraced to an order block, and we're going to discuss about this. So starting from the top here, we have an area where price again broke structure, pulled back, and tested this supply area. Now, as you can see from the starting point here, you can see we had an area where price broke really down, really fast, bearishly, right? Then price took a pause in the market, then took another bearish sell-off, right? And this was the last up candle before the major area pushed low. So in this case, if you can see this order block here, you can see how we have one bullish candle, right? And nothing behind it. There's no other bullish candles behind it or bullish candles in front of it. So how would we, in essence, how would we refine this order block? Well, it is up to you, obviously, to say to yourself, okay, well, I'm on the highest time frame. Let's just say, 30-minute is our higher time frame at this point. And we could just stop here as is and then wait for the markets to come here and then tap our supply area and wait for the markets to then take off, to sell off, right? Or we can refine this supply area more efficiently, say by going to the lower time frames, right? So let's go all the way down to the lower time frames right now. We're on a 3 minute, I'm sorry. Oops. And now we're going to look for a better area to refine the order block. So notice again how we have price coming here in supply. Okay, if you can see right over here, prices, we had a low and a high over here. Okay, so you can easily just take this supply area and then mark it off like this. Okay, now let me explain why I refined it like this rather than just this one entire order block. Okay, well, you can see that there's a move. We call this, or consider this, a move in the market. Okay, a pivot point in the market where price moves or pivots up and comes all the way down, right? You can tell that price obviously mitigated this order block here, and although price can mitigate twice or come back to a supply area twice or come back to a demand area twice. Now, before we jump too far into other details, let's just focus on refining the order block. So an order block essentially is, there's a bunch of candles inside of the order block. So this is one entire order block on the higher time frame, which is a 30-minute time frame. We can definitely come in, refine the order block to this area right here, right? Because price is essentially the last area where price did mitigate, where price did come up to, right? Let's see if we can do it better. There we go. All right, there we go. So that is essentially our last up candle before the down move. You can clearly tell, obviously, because price never came up to this area here to mitigate, right? And that was the last standing up candle before the down move. And as you can see here entirely, when you zoom out right here and you come close to it, price touched the order block by the pip, right? This is our next lower high over here. So this would be essentially where you would look for sells, right? So that's how you would do it. Again, notice over here, I just want you to quickly see this. In this area, we did have 3 bullish candles, okay? But we didn't just take any of the bullish candles, or we didn't decide it was this one or this one or this one. We decided we didn't decide if it was this one or this one. We decided this one completely because it was within the range of this high and this low. Okay, here's the low, here's that high. So this was essentially our last up candle before the major push down. Okay, that's how I want you to see it. You always need to identify your last high, your last low, and your last high, or your last high and your last low. Okay, before deciding where the last up candle before the major move down is. Okay, so let's continue off on the next one. Let's go on a 30-minute here, back again. All right, as you can see over here, we're seeing prices breaking below structure here. This is considered our substructure breaking below our minor structure. Minor structure is pushing up, substructure is pushing down. Okay, and you can see our break of structure occurred here, right there. So, in essence, we're looking for price to push back to where? Back to an order block. You can see clearly here we had an area where price actually pulled back to supply, and then now we're going to look for the price to sell off, right? But are we happy about this? Are we happy that this is the range that we're looking to sell off from, right? Do we want our zone to be this big? No, obviously. You can obviously see here we have a low and a high on the higher time frame, okay? But we can do a better job, obviously, refining this. So if we go back to the 3-minute or the 1 minute, oops, we went too far. We go all the way back here. All right, let's go back here. There we go. Okay, we can do a better job, obviously. Let's look at this zone area here that we just looked at, okay? Again, you can see we had a low, and then we had a high right over here. Okay, so notice, where is our last bullish candle before the major move went down? Can you guys spot it? Oh, I can see it right here. This is our last bullish candle before the major move pushed down, okay? And why is that? Well, this is the one because this was within our range. It's within our low and within our high range. So technically, this is our last high before the major move pushed down. And then if you zoom out, obviously you can see what happened here, okay? Right here's where price touched, and now we have a difference in terms of the size of the zone. You could have had you could have had this zone and sold off from this area, right? Or you could have had it from this zone, where the zone is just about half the zone as the first zone, like this. Okay, so this plays a huge entire part in our risk management, obviously, which we'll talk about later in the other videos. But you can see the difference, right? So let's continue further on to the next one. Let me play the market here quickly so it could populate fast. Okay. Here we go. All right, almost there. All right, here we go. Let's go back here. Okay. Sure enough, we had an area where price mitigated here in the second one, on the second example here, and price broke beneath, right? You can also do this again. Now, here's another area where price could potentially come and mitigate, right? Come into a supply area. But unfortunately, as you see here, price never mitigated, right? But let's just do this as a fun example so we can see how we can better manage this area, how we can better refine this order block. Let's go back down to the 30-minute. All right. We are right there. Sorry, forgive me. I'm kind of lost in this area. Here we go. Okay. So as you guys can see, this was our last order block, right? We had our high, our low, and our high here. Where is the last potential up candle before the down move, right? Some of you may say, well, this is the last area over here, right? We can obviously refine it all the way down to this area, which is also true, okay? But if you look at this entire swing here, this leg over here, where was the last up candle? Now, this is a tricky one because they're all bearish candles, right? Which is very true. Now, we need to find that last bullish candle within this range, within this low, and then within our high here. Where could it be? Well, I'll tell you guys this. This is our last up candle before the down move, right there. And the reason why is because this is an indecisive candle. Okay, it's an indecision candle where price is neither going up or down. It's just in the middle. Now, you can see over here we had where prices did go up right over here. The bulls came here at one point in time, pushed price all the way up, and then the bears were able to close down here, or I'm sorry, open over here to push price low, right? So this is essentially our last down candle, the last up candle before the down move went lower. We can actually even just highlight most of this candle because we want the best possibility of a chance for price to actually reach our supply zone here. So that way, we could be able to trade this entire zone when prices do eventually get up there. Oops. Here we go. Okay, so we have two areas. Obviously, if this zone doesn't work, then this zone is potentially going to work, right? Because this is essentially an indecisional candle as well. You could obviously argue and say that, well, this is also a last up candle. Sometimes prices do not come and mitigate these tiny little areas, these tiny little indecision candles. They actually just mitigate an actual mitigate an actual bullish candle, okay, that has a substantial amount of body in it, a decent amount of body inside. So that's why we can say this or this would be one of our order blocks. But again, we made a huge difference in terms of the zone. We made this huge zone into two tiny little zones for a better risk to reward eventually when price gets up there to sell off, right? So let's go back to the 30-minute. All right. Now, right over here, you can see this area. You'll be surprised why I marked this area. This area here is a supply area, just like any other areas that we've marked. They're all supply areas. The only difference is that this area here isn't one entire candle like these few that we've marked over here. Okay, this is essentially a one entire candle on the higher time frames. I believe maybe it's on the 4-hour. It's an entire candle. So this is one whole entire candle on the 4-hour. But for our purposes, notice that I could have marked this area here as would be the last order block, right? But you can see here clearly the price never showed up, okay, here in this area because price never mitigated, price created some liquidity, and then price dropped off. But but I know for a fact that, this would be a safer area for us to look for buys, for sells, because when price is eventually breaking structure, we want the best possible chance to enter this next market, okay? A lot of the times as traders, we don't want to miss the opportunity to sell or to enter a trade. So we would have two options. We would have this zone marked out from this low to this high, okay? And we can also have another zone marked out for this individual order block here, like this. So now you would have two order blocks marked out, so as to watch and wait for the market to see which order block it'll hit first. And once we hit these order blocks, we then go on a lower time frames to make sure to see how we can scale and take advantage on a lower time frame on a lower zone like this over here. So here we go. So as we notice, price never touched our order block zone here. It touched our major supply area order block on the higher time frame on the 4-hour. As prices did come up here and touch this major area, let's zoom in and take a closer look to see if we could look for potential areas to either trade from and or create another supply zone. As you can see here, we're on the 3-minute right now. You can see we had a high, a low here, okay, a low, and then we had a high here. So if prices never broke above, okay, you can clearly see again, we had an area where where was the last down candle before the major move is about to go down? Where's the last up candle? In this area. You can clearly see it, it's right here, right? So look what happened here. All right, let me push this out of the way. Look at this, price touches by a pip, by a hair, right? Right over here and right over here. And then prices sell off. So again, you could have had a huge zone like this, play out from this low to this high. That wouldn't do any good for us in terms of risk to reward. We want to make sure that we're precise and accurate with the correct order blocks that we're looking to target. Therefore, this is the best possibility. Okay, let's look over here just one more time. I want to talk about this. All right, notice how we have a row of candles, right? And either one could have played out just fine in here, okay? But instead, we chose the one that fit the best description in terms of the last up candle, okay? We could have marked, as you see over here, we had a consecutive bullish candles, 4 of them going up, okay? You understand that we don't have, we can't play this huge zone like this. We just wait for price to come into this zone, and then we look for prices to see where prices would hit in terms of the last up candle. This was one entire candle on the 30-minute, right? And this makes sense in the essence of having a last up candle. We want to refine this as best as possible to get the best risk to reward. Okay, so let's move forward. Okay, we are, let's see, where are we at? Right here. So as we see, prices push down again, broke some structure over here as well. Actually, it was right here. Right there. Okay, we need to wait for price to come back up, right? Here we can easily see we had consecutive candles just pushing up. We could have marked out the entire area, okay? We see that this is the low and this is the high of this area. But unfortunately, you could, this is too big. The zone is way too big. So we can just minimize it to the last up candle, like this, okay? None of these candles are engulfing any of these candles. Okay, they're all about in the same high and the same low, and the same high and the same low of this range. So typically, any of these candles can play out as your last up candle, but we prefer the one that was the actual last candle, which is this one. Let's go down on a lower time frame now to see where how to control the zone. Let's see if we can push it even smaller. Right over here. Okay, right here. All right. Beautiful. We can see that we have this last high and this last low and this last high. We have a last down candle within this range. Where can you see it? Okay, before this range broke, where was the last up candle? It was right here, right? Right there. Okay, you can say that this is our last up candle, right? But notice we have this range that is that is an up candle on the higher time frame. Now it could be this candle, sure. It's not a wrong answer, but we would say it would be this candle here. Okay, these highs right here, because these highs aren't higher than this main range. It's supposed this is the order block, even though it's a bearish candle. Okay, just notice that. And the reason why, again, is because we're within this high and this low of the range. So we can mark this as our actual order block. And as you can see all the way far to the left here, look what price did. Touched and pushed over. Now, obviously, you can see to yourself and say, well, hey, price broke above the order block. How come this isn't how come it did that? And well, the biggest explanation is, price goes up to take out liquidity, which we'll talk about in other videos, and then price then starts going bearish at this point because we are just in a bearish market, right? So that's why this is a confirmed order block on the lower time frame. All right, let's continue forward. Here we go. Okay, as you can see, we had another break of structure over here. Okay, prices broke structure, came back up, and we have this area here. All right, this entire area right here. We have a low and we have a high. Prices came and respected this area, and now we can move down to the lower time frames to see what's happening. How can we reduce this zone? Here we go. All right, as we can see here, again, we have a low and a high. And then we had another area where there's a low and a high here. You can even go zoom in closer and see where is that last order block before the major move down went, right? You can, a lot of people can say it would be this, right? But it wouldn't be this because it would essentially be up in this area because we have a low and a high created here. You can see here. Here's our low and our high. Okay. Now within this area, there's more. There's another bullish candle. That is the last down candle. Where is that last down candle? Well, it would be here. Okay. There's another example where prices can, as you can see, we had bullish movement here. That within this range, we have the last up candle, which is pinpointed to this. That's where price is directing us to, right? And as you can see, price didn't mitigate just yet. Let me see if we're correct on this one. Okay, from this range to this range, we had an area of... Oh, I see it right here. Okay, so we can argue and say this. We can argue and say that this is our last high here. Based off of this break, it would actually be this one right there. Within this range, this would be your last up candle before the down move. Okay, because price broke structure here. You can see it right there, right here. Okay, and so we are actually having this, and this is our range, our low and our high here. And you can see that price broke structure. Now we need to know where the last up candle before the down move went. Well, it would be essentially this area in here, right here. It's a very tricky one, right there. We'll talk about pivot points on another video, but essentially be this area here because price, yeah, right there. That's where price touched. It touched it by the pip, by the hair, as you see right there, you see? And again, I'll explain why this is the last up candle. If we zoom in here, okay. Notice again, we were in a range from this high to this low, okay? We're in a range in here, right there. Let's take this out. Okay, from this high to this low, there's a range happening. Okay, when price broke structure, we're looking for the last up candle. Now, obviously, as you guys saw, I assumed this one would be the one, right? Which is fair to say that this could be the one because we're in this high and this low of the range, right? Like this. But there are times where prices do this, where there's a wick above and there is a wick below here. And then price will consider this as the true last up candle because there's a pivot point where price is doing this. Price is going down fast, then stopping a bit, and then pushing down. And in here, there's the last up move or last up candle before prices come back here and then sell off like this. Okay, so that is essentially our last up candle before the major move went down. It can be a very tricky process if you aren't very attentive to these things. Let's move forward. All right. We have another area here. Price broke structure. Price pulled back. Oh, I'm sorry. We just did this one. Let's go back here. Price broke structure here. Price pushed back, and then as you see, we have this area that price is testing as a supply area. Now notice over here we have a high and a low. The low of the wick and the high of this wick. So prices can be in this area in terms of the last up candle before the major move down, right? So let's go and zoom into the 3 minute, I'm sorry. I'm calling it the 3rd minute, which is very funny. All right, we have an area, again, a range. Here's a high. I'm sorry, here's a low right here. And then here is a high. So within this range, there has to be the last up candle before the down move, right? Notice we had so much power in this area here that price hasn't come back yet to mitigate. We can consider this as the last up candle because price over here never touched. Price just pushed very fast. It broke structure, broke the low of this, okay? And price never met the supply. It just continued breaking more structure. As we zoom out, you can see here entirely, we just made our zone from this size, or from this size to this size, right? Now you have a better risk to reward. Again, why is price breaking above? Well, the reason why it's breaking just a bit above the order block, because price is grabbing liquidity from the highs and pushing price down. Of course, when you come here to the entry time frame, you can wait patiently for price to you would look for your confirmation entry to take a sell from here. You wouldn't just look to sell immediately from here, although there are people that do that. All right, so that is it for that on the bearish examples. Okay, now let's go to the bullish examples, and I'll make this video rather quick. Okay. All right, here's a bullish example. So here we are. We have a change of character. Price is reversing, going bullish, right? Okay. Let's go down to the 15-minute. Here we go. Now, as you see over here, when we had a break of structure, price came in retraced back to a demand level. We look to see where we can mark the last down candle before the major move up. Okay, and we would mark this area right down here. Notice where price touches, right over here, right? And then price then pushes up. Now let's go a little bit deeper to see if we can make the zone even smaller. Okay, let's go here. All right, within this high and within this low, where's the last up candle before the major move pushed up? So this can be a little tricky, okay? But we would consider this as the last up candle over here. And you would probably be wondering, well, why is that? Well, look at the last down move. If we look at this high here, and if we look at this low, this would be our last down candle before the major move goes up, because the body never actually broke above this high. Had the body been broken, then we would not consider this as the last up candle. Okay, but if the body is beneath the last high, okay, then we can consider this as the last up candle. Okay, essentially you can look at these areas too. Here is the last down candle. I'm sorry, it would be the last down candle. Okay, before the major move goes up, something like this, where I was just explaining on the bearish example. Okay, we had an up and then we had a down move and then price pushed up. Okay, so essentially you could look at this area as the last up candle area before the the last down candle before the major move up, like this. Okay, because essentially the last down move, there was another down move that happened here, the last sell off right here before the major move went up. Okay, so this is the one we would pick. Evidently you can see that the zone is completely small, and then price touched it by the pip right there. All right, let's go back up to the next example. All right, notice we have a row of candles, okay, from this bearish side, bearish candle, from this bullish candle, bearish, bullish, bearish, right here, right? We would mark this obviously as our chosen bearish candle. Before we even move further there, let's look at this one here. Right over here. We see we have a high, we have a low. Here's a last bearish candle before the major move goes up. like this. And then now we would go and confiscate and see what's happening in this bearish candle. Can we make the zone even smaller? Let's go down and check it out. Okay, here we are. So as you can see over here, we have a high and a low marked out. Here's the high, here's the low. Okay, inside, where's the last bearish candle that we see? Here, right? Right there. Okay, that would be our last bearish candle before the major move up. But we can do a better job in finding where that last bearish candle is if we move even on the 1 minute. Now, I don't know if my time frames will allow me to go even on a lower time frame, but we can also consider this as a potentially our last bearish move as well. Notice how we have price ever so slightly touching the area here, and prices just take off, right, from here. So we would look to buy in this area to take price going back up. So that's a perfect example right there. Okay. Notice now why would this be our last down candle? You know, a lot of you would argue and say, well, this is the last bearish down candle. It's very true. Okay, but where's the last bearish candle before price broke above structure? It would be here, because again, we have an area where prices were going up and the prices went down here with this little small candle, and then this little small wick, and then price just broke above, right? And price never touched right over here. As you can see, prices touch here and then push prices up. That's how it works. Okay, let's look again. This example, multiple candles, multiple bearish candles. We saw the last down candle. Okay, price broke above, came back. Now let's go and zoom in a smaller time frame. Can we make this zone smaller? Right. Where is it? Right here. All right. So we had a clear high here and a clear low. Where is that last bearish candle? Now, a lot of you guys, again, would say this is our last bearish candle. That's correct. But don't get fooled into thinking that this is the only bearish candle here. What did I show you on the last example? Well, look right here. We have a high and a low right over here. Okay, high goes up, a low goes up. Here was this candle that was responsible to break the structure, this high here. And as you see, we had that wick right there playing a huge part into the trading, into this trade. Look at what happened here. Prices definitely touched that wick before prices shot back up. Okay, so that would be considered our last down candle before the uptrend. Very easy, right? Let's continue and looking at others here. Okay, we have an area price broke structure here. We see that we have this major bearish candle. Now notice how we didn't just choose any bearish candles, right? We weren't just like, okay, well, maybe it's this one here, right? Or whatever, because notice how prices are cutting below the zone. So if we zoom in here, we had a bearish candle, we have a high, and we have a low. Right over here. So there's a high and a low in here. Where would the last bearish candle be in here? Well, it's a very messy area, to be honest, but I'll tell you this. A wick counts as a potential area where a hidden order block would be. Okay? Normally, it would be somewhere where prices are, where a wick isn't touched. So if you look over here, right here, see this candle over here? We had this high here that wasn't broken by the body. The high of this candle and the low of this candle. This high wasn't broken by a body. It was just broken by a wick. This was essentially the last down candle here before prices broke above. Okay, now we can play this a bit more safer and go and minimize the zone for this. So let's go down and tackle this and see how we can better manage this zone over here. Alright, right here. Once again, you see that we have a high and a low in this market. Prices never broke here until until the market broke structure over here by these candles. So we can look at potentially this is our last low right over here. Some of you may say this would be our last low, which is true to some extent, but it isn't the last low before the market went up. The last low happened actually right at this wick, because there's a hidden order block inside there. The lower the time frame I go, the lower I can see. You can spot another down candle before the major move goes up. So here would be our appropriate zone. Okay, we just went from this big zone like this to finding our last down candle before the major move up. Okay, just like that, and then prices take off. Let's do a few more of these so we can show you guys how this truly works. Okay, right over here. Alright, when prices broke structure, we saw that there's an area where prices came back and touched this order block. We have actually this area here, this entire area right over here. Okay, and notice how we had, it's just a mess of consolidation area right here, right? An area where price is ranging. So let's go down and we're going to see where the last high, well, we can see where the last high and where the last low was here. Here's the last high, okay, and here's the last low of this area. So somewhere in here would be the last down candle before the major move up goes up. Let's go back down. Right over here. Okay. You can see we have a low and a high here as well. Right here and right here. Okay. And now if we zoom in here, let's just focus on this low and this high here. Here. And this here. Now, a lot of us would say, okay, well, this is very confusing because obviously we don't know where the last low is, or maybe you do know. This is considered to be a low, last low area here. Okay, right over here. You can also make it down to this wick, but we're going to talk about over refining order blocks after this video here. Okay, so there we go. This would be our last low before the major move pushes up here. But we also have another low right over here. Right there. From this wick, right there. Notice how prices don't touch here. Okay. Right over here. You zoom this out. There we go. Right. Now, the reason why this would be the last low also is because prices never, there's a long wick, there's a hidden order block in there that we don't see as a trader. And price never touched this area of demand. Okay, we looked at our low here and we looked at our high here. So we marked this area from this low to this high, and we marked this area because this area is also the last low before the major move goes up as well. And obviously both of these zones played out perfectly fine, right? So that's how we look at it. Okay, let's go on the 30-minute again, 15-minute perhaps. Okay, and let's look at this example here. Okay, right there. Let's skip this one for a second. Okay, notice how we had a break of structure. Okay, even wicks are considered a valid break of structures in the market. You can look at this high and this low here. Okay, we can come here and see where price taps into the demand area. You can also look at this wick here as our last down candle as well. Notice how we had a high and a low here, a high and a low, and price breaks this high. So this would essentially be the last area where price comes to demand area, but notice how big our zone is. It's too big. So we would then look for the last bearish candle in from this high to this low, and the last bearish candle would be most likely in here before prices break above. Okay, to some of you also this may be a last bearish candle right here before prices move up. As you can see, prices come down here nicely and then tap the demand area and take and the prices go up, right? But we're wanting to look for the higher probability trade, not the lower probability trade. So the highest probability trade is down here because of our high and our low. Our order block here hasn't been tapped. As you can see, we will go down now to the lower time frames to make this zone even smaller. Alright, right here. Let's look carefully from this high to this low, right over here. Okay, now we see over here our prices are just going sideways. Technically, from this high to this low, technically you can see that prices aren't even changing really. You can of course see that this could be your last order block before the major move goes up, but we're going to look at actual solid candles in this area, because as you see here, this is a really good probable order block for the markets to come and tap into. You can just mark this obviously as your zone. Notice we were from this high to this low, so the zone's definitely changed quite a bit, you know, in terms of size. You could also have this wick marked out as well to have your last order block tapped in like this. Okay, prices went below this order block because price is grabbing liquidity and then taking prices higher. So this would be your probable order block, probable trade. Okay, last example here. We have a high and a low built here. We gotta see where our last low is, or last down candle before the major move up goes up. Okay, let's go down to the lower time frame, and we'll see we have a huge zone marked out here. Now within this area, we gotta find the lowest of the lows, right? Here we have a low and a high, a low and a high, a low and a high, right? So we would come all the way down here and have this low and high marked out. Now within this low and this high here, or this high and this low, we got to see where the lowest of lows are here, right? Within this range. Here is our high. Here is our low. Where's the last, oops, forgive me, something just happened. Where's our last down candle before the major move happened? Okay, let's look at this. Oh, goodness. Okay, where was the last low? Can you guys see it? Excuse me. Okay, now if you notice, price is at a range going here, okay? And I guess we don't have the data for this, but yeah, here's where it would be. The last low would actually be right there. It would be anywhere from this candle, from this low candle to this. So we can probably say that this would be our last down candle right there before the major move goes up, right? Price did break structure. Price broke structure, came and mitigated this area, touched our demand, and took off. Now, normally we would like for price to come all the way down here to tap the order block and push price up. But we don't have data for that just yet. So that's it, guys. That's how you minimize, that's how you find your order blocks, refine them, and then you would scale down to lower time frames to make them even smaller, so you can have a better quality of a trade and a better risk to reward in the markets whenever you're taking trades. Okay, so go back and definitely test this out. Go and mark each high and low of every swing. You know, for example, in price break structure, mark your highs and your lows, and then go ahead on lower time frames to look for your your last down candle or last down move or last down pivot before prices go up, and go ahead and mark that last down candle, inside of the lower time frames. Okay, it definitely helps to reduce as much risk and as much risk as we can in the markets. Okay, to have the best probable trades, to have the highest rewards and minimize our risks. That way, this will help you understand. Once you mark everything out, you'll be able to start seeing clearly how these zones work within our last down candle or last up candle. So definitely go and check that out and do it. And I'll see you guys in the next video.